Good morning. Welcome to Stock Market Today for Wednesday, March 13th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at @DanRusso_CMT. Find me on StockTwits under the same handle. That's at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. You'll be able to follow along with this show. I also want to highlight the fact that you can catch this show on our YouTube channel. You can catch it on stockcharts.com, and you can catch it over at See It Market. So a special thank you to all of our partners out there that broadcast this show every day. U.S. equities were mostly higher in quiet Tuesday's trading, but the Dow bucked the trend due to continued weakness in Boeing. Treasuries were stronger across the curve following a 10-year note auction, helping the move toward a 12-month low in yields. The dollar was down on the euro cross and a bit better against the yen. Gold up 0.5%. Oil was higher, with WTI settling up about 10 basis points. Your outperforming sectors were healthcare, utilities, energy, comm services. Your underperformers were industrial, consumer staples, financials, and consumer discretionary. As we get to the desk this morning, futures were up 10 basis points after finishing higher for a second straight session yesterday. Asia was weaker overnight, with China down over 1%. European markets are mixed. Treasuries are weaker with yields after yields fell towards the lows of the year yesterday. The dollar is weaker versus the yen and euro. Sterling is higher following yesterday's pullback. Gold is up 80 basis points. WTI crude is adding 1%. So nice rally for a second day in a row, but okay, we're still in the range. Will we break 28.20? We're going to take a look at a chart that I think is interesting a little bit later in this show. Support remains down below 27.25 to 27.50. Resistance, we know it. RSI continues to hold in bullish ranges, and Chaikin Money Flow remains bullish. So not much has changed over the course of the past couple of days from a trend perspective here. We are still grinding sideways within this range, looking for a breakout. Your market in a minute. What am I talking about in my note to Chaikin Analytics clients today? Rally continues, pushes S&P 500 back to the resistance zone. Fine, we're kind of right there. Near-term oversold conditions increase the odds of a breakout. We're going to talk about what that means a little bit later. Software and services stocks are set up for entries. We're going to dive into that group. Sentiment downtick with the 5-day decline last week. No big deal. Nothing really to speak of there. And futures do point to a higher open here today. Power bars got better yesterday. Dow 8-3, despite being down 35 basis points. Obviously, Boeing, the Dow being a price-weighted index. Boeing, biggest weight in the index. Under pressure, Dow under pressure. S&P 500, 135 bulls, 62 bears. NASDAQ, 26 bulls, 14 bears. Adds a little over 0.5%, so nice outperformance yesterday. Small caps were relatively flat, 465 to 347. Bulls to bears. Bonds uptick, strong 10-year rally. You've heard me talk about what I think is the path of least resistance for the 10-year yield. It's lower. The auction yesterday kind of was a data point to confirm that view. Chaikin Power Gauge, power bars rather, large cap stocks and small cap stocks are bullish. Your stock of the day, shout out to Ryan Dietrich, the Chief Technical Strategist over at LPL Financial. LPLA is the ticker symbol. Stock closed at 73.35, up 52 basis points yesterday. Chaikin Power Gauge rating for LPL is very bullish due to very strong earnings performance, very positive expert activity, attractive financial metrics, as well as strong price volume activity. So when we take the 20 factors that fall into these four categories, we roll them up, get a very bullish rating, very bullish stock, strong trend, strong industry group, type of name we want to consider. Market and model are in agreement here as the stock is an outperformer. So we have a very bullish stock outperforming the market. Oversold based on our overbought oversold indicator, and despite this slight dip in the negative territory for money flow, it's been persistently bullish since November. We have some solid support right here at the $70 level to shoot against. As long as LPLA is above $70, I like it on the long side. Think that there is likely a breakout and room to run towards 80. Risk reward looks compelling here. Take a look at LPLA on the long side as long as the stock is above $70. Sector tracker now, looking at the movement of the major sectors over the last 5 days. And what we can see is that the strong have gotten stronger. And by that, I mean the defensive groups. Utilities and real estate continue to outperform. And obviously, we would expect that with such a strong auction in the 10 years, sending yields lower, we would expect our bond proxies in the equity market to really outperform. And they have been. And they continue to do so yesterday. What's exciting to me is tech, 20% of the market, moving higher. Comms, a little bit of offense, a little bit of defense. We've been talking a lot about materials, right? We're watching that downside momentum on a relative basis wane and looking for opportunities there. Bottom of the list, industrials, sell-off in Boeing, obviously going to hurt that group. Energy is a little bit of a surprise to me just because oil has hung in there, but we're watching. Discretionary healthcare, financials, healthcare, we've talked about it ad nauseum. We've been watching this kind of deterioration in the relative trend of healthcare. It was a name that it was a group that we liked all through last year. This year, different story, just not there from a relative performance standpoint. Actually, in my bearish insights note today, I'm highlighting the healthcare group, in particular the pharma stocks, for potential bearish trade ideas. But let's move to the bullish side. Our industry in focus is software and services. And just like yesterday, we looked at semis, right? Today, we're looking at software and services. And my note, I'm looking at software and services as well. Remember, this is auto-generated for this show, and I just do the analysis in real time. Software and services over the past 6 months has outperformed the S&P 500 by 5.7%. Power bar ratio, which measures future potential, is very strong. 57 bulls to 5 bears earns it a rank of number 1 of the 21 subsectors that we track, and it's moved up 2 slots over the past week. Some of the names that look compelling here, or you might want to consider: Monotype, TYPE, Progress, PRGS, and CDK. CDK Global all have very bullish ratings, but what I would say is just get the holdings of XSW. A lot of compelling names in there. I have Checkpoint as my bullish stock of the day. We'll look at that later. But let's take a look at CDK here, because I think that this is what's interesting is there are opportunities in names that are near 52-week highs, like a Checkpoint. There are also opportunities in some of these software names that are making a turnaround. That's why CDK kind of looks compelling to me. Nice downtrend. It's been broken. Let's walk through the process. Very bullish stock. Strong trend. Strong industry group. Type of name we want to consider owning. Very bullish stock and now outperforming the market. Dynamic duo in gear. Market and model are in agreement. So we know for sure now this is the type of name we want to consider buying. Question is now the time to buy it? Overbought, oversold indicator is oversold and beginning to turn higher. Chaikin money flow has remained bullish. This is the type of name you want to own. You have a level here to shoot against. $55 is your level to shoot against. This congestion area right here, breakout. Above $55, I want you to be considering CDK for the long side of your portfolio. If you're long it and it dips below $55, you need to reevaluate the position. But I think above $55, this does look compelling. We have a leading stock in a leading industry group in a leading sector of the market, while the market is in a near-term uptrend. That's the setup. That's the process. Take a look at CDK Global, ticker symbol CDK, closed at $58 yesterday as a potential long idea. Yesterday's S&P 500 movers, gainers and losers. Got to tell you, there wasn't a ton of news to send these stocks. We're kind of in that news vacuum period where earnings are pretty much out of the way. What's interesting Devon and Fang were big winners. Were big losers a couple days ago. Now they're just kind of rebounding and getting some back. What's interesting to me is Whirlpool. Whirlpool was our poster child for what we call a classic bear, just a name to avoid. What's interesting is this is why models are so important, especially for the fundamental work, because it takes your emotion out of the equation, right? Whirlpool has been a disaster of a stock. Very bearish stock, or underperforming the market for quite some time, and our model picked that up the entire way. However, without an objective process, it would be easy to remain dogmatic in that bearish view. But the objective process helps us with that, as now Whirlpool has a neutral Chaikin power gauge rating. So no need to really be bearish on it anymore. Not quite, running out and saying to buy the stock, but something's changed. And we have an objective way of evaluating what's changed and why. Newmont Mining had a meeting about their deal. That stock was up 3.2%. Align up 3%. Loser side of the board, F5 bought a private company. Street didn't like it. Boeing continues to trade lower as more and more countries are grounding that jet that has had problems. LTHM, we don't have a rating on it. It's been volatile on both sides of the coin. AAL and UAL both down over 3% on the airline side of the market. So now, this is what I was talking about. There's a little bit of a different setup here as we're pushing back towards resistance. And I'm using our chart today because I want to highlight something. I'm saying the attack of resistance from an oversold position. Notice that last week or 2 weeks ago when we were trying to push through the 2800, 2820 level, our overbought, oversold indicator was doing so from an overbought position. This is a shorter term indicator. A lot of times you see me talk about RSI or hear me talk about RSI. This is a shorter term indicator proprietary to us, designed by Mark Chaikin. And what it is it's designed to become oversold in a market environment. Even if we're going up or going sideways, you might say to yourself, Dan, how can you consider the market oversold? We've ripped so hard from the December lows. This is why. It's a shorter term indicator. So essentially what this is telling us is we are oversold within the context of this trend. And to me, that's interesting because we're knocking on the door of 2,800 again, except we're doing it from an oversold level. So maybe the oversold condition provides the juice we need to push through. It's a different dynamic than when we were there 2 weeks ago. 2 weeks ago, we were overbought, right? So that's kind of a big ask for the market to push through a solid resistance level when it's already overbought. Now it's a little bit different. We're asking the market to push through a resistance level from an oversold position. To me, that increases the odds that we push through. Is it guaranteed? No, nothing is guaranteed in the markets. But I think the odds of us breaking through are higher now than they were when we tested this level 2 weeks ago. Q is beginning to lead, providing a little bit of a risk-on type confirmation. Here's QQQ. We'll look for them to break through. We'll look for that index to break through 177.50, the ETF rather. But what's interesting to me is it's broken the downtrend relative to the SPY, and now it's breaking out of this consolidation to the upside, all while momentum has shifted up into bullish ranges. 200-day moving average has acted as support. To the extent that the Qs are leading the market, I think that has bullish implications for the market in general. You can see that when Q's topped and underperformed, and the market fell out of bed. But notice back at the end of the year, when the S&P 500 was bottoming, the Qs were did not make a relative low, a new relative low. So the fact that we're breaking out here, I think that carries bullish implications for the market. Software continues as leadership. Now we looked at just a quick view of the group, but here it is on a technical basis. XSW relative to SPY, nice breakout, a little bit of a consolidation. I think we move higher. Why? Because the RSI of this ratio has held within bullish ranges. Nice shift higher, series of higher lows for the RSI, becomes overbought, pulls back, holds above the 50 level. That's a momentum confirmation to the strength that we're seeing here in a shift to bullish ranges, all while XSW is on the verge of breaking out on an absolute basis. Look at a name like Checkpoint. Breakout, retest, triggered a buy signal today. Very bullish stock, leading the market, becomes oversold with bullish money flow. You've got solid support right here at the 118 level. I like Checkpoint. It's my bullish stock of the day in Chaikin Analytics. I think you want to consider it here for the long side of your portfolio. So that's it. Head over to chaikinanalytics.com/today. Sign up for the email to follow along with this show. Get daily stock ideas in your inbox every day before the market opens. I'll see you back here tomorrow, folks.